Welcome in everybody, TA Tuesday. So today we're going to, as usual, just jump right in and talk about exactly what we've got going on. Bollinger Bands is another one of my favorite tools. I'm starting with all my favorites first. It's like all my greatest hits, and then walking through to combine them all at the very end. So technical analysis, if you haven't seen the series so far, it is critical. You cannot play in the market without having good TA capabilities, as well as fundamental analysis, financial analysis, macro, etc. So let's jump in and very quickly going to talk about some interesting companies today. Twilio, Ethereum, Tesla, Cardano, Palantir, and believe it or not, GameStop. Can you believe it? But it's just to make a point. So let's talk, as usual, about math, money, and freedom. And that's the goal of this channel, to help you all build a better life for yourselves and your families so you can give back to society. The tool we're going to use is TradingView, and I always get a lot of questions about what settings do I use. So I'm going to tackle this up front so you guys can write it down. Now, first of all, before I jump into this, it's very important to build what you like. Build your own patterns and frameworks. Don't just go with mine. So I use the Bollinger period of length of 100. I use 2 or 4 hour periods. Now remember, a 4-hour period and a length of 100 is like 50 days. So keep that in perspective. And the 50-day moving average, and 50 days is a very important time in my book for looking at the stock market. I also use 2 standard deviations and the RSI of 10. So very simple. But again, get used to your own tools and your own methods and get familiar with what you feel comfortable with. And I'll talk a lot about that as well as we go forward. So the stocks, as I mentioned, we're going to look at, and cryptos in that order, I think, more or less. So Bollinger Bands defined, what are they exactly? These really help determine whether prices are high or low on a relative basis. Sounds really simple, and it is. They're used in pairs, both upper and lower bands. So think of it as like a freeway, left lane, right lane. And they use it in conjunction with a moving average. And by default, Bollinger Bands are set to 2 times standard deviations, i.e. 95% of all price predictions. Now, for those of you who aren't familiar with standard deviations and statistics, here's a very quick refresher and why it's important. And it'll all make sense because many of you know how I play and how I trade. And this is a huge part of why I am the way I am. Again, everything's driven by mathematics in my little brain. So first of all, deviations, standard deviations, typically there's what you call the 68, the 95, and the 99.7 rule. So the 68 is basically, if you imagine the middle of a distribution of anything, for example, it could be stock prices or age, or you've got 34 to the left and 34 to the right, and they both add up to 68. And then the next standard deviation basically covers the next percentages, which add up to coverably 95% of all scenarios. Now, the 2.5% on the far left and the 2.5% on the far right in green, that's where I like to play. So that is what I call the 95%. And the Bollinger Bands play in that 95%. And I'll show you more of exactly how this all works together real quick. And in 10 minutes, you'll become an expert. So first of all, in simple terms, Bollinger Bands, they're often used to determine overbought and oversold conditions. Overbought means bearish, oversold is bullish. And we saw a lot of oversold stuff over the last couple of days, and that's why I'm showing you some of the charts that are quite relevant today. So why do I use Bollinger Bands? So many of you have heard me talk about movements and things like snake movements and the way stocks and crypto sometimes work like snakes. Well, that's exactly what I feel when I look at Bollinger Bands. They are rhythmic snake movements, and the meandering dance becomes very predictable over time. And sorry for that creepy image, but I want to kind of scar your brains as to the importance of watching this type of rhythmic dance, because you almost become at one with it when you look at them for a long time, like 20 or 30 years. It becomes like second nature. So let's look at what I'm talking about here. First of all, we'll talk about Bollinger Bands and widening and tightening gaps. So first of all, Bollinger Bands widen as price volatility increases. So in the first chart there on the left, it's Ethereum. And you can see the Bollinger Band widening. It's become huge because the volatility is a lot higher. And the opposite is also true. When the bands tighten, it means the volatility goes down. And the wider bands imply a higher standard deviation, which means an average price is less likely to be concentrated near the mean. And the mean is that green line in the middle. And that's very important. I'll show you guys later as well why that's important. But this gives me context and structure around price. That's it. It's really simple. So you got high volatility, big broad bands, low volatility, tight bands. And the reason the second chart I threw in there is GameStop. So what was the craziest and most volatile stock has now a far lower volatility than something like Ethereum. Who would have thought? So that's the important thing, and that's why I threw GameStop in there as a good example of how you can get a feel for volatility. Now, why do I like volatility? Well, the higher the volatility, the higher the options price. And one of my favorite things to do is sell options. So think about that. So this helps me determine as well from the outside looking in option prices. So I'm going to talk a bit what I call at no man's land, no woman's land as well, with Tesla. Now this chart here shows you a couple of things. First thing is what I call the danger zone. And that's when you go outside the Bollinger Bands on the top range. And the second one is the opportunity zone. That's when you go under the Bollinger Band. Here I have noted 2 opportunity zones and 2 danger zones. And remember, we only spend 5% outside of the Bollinger Bands. And that's why I cover the standard deviation at the beginning. And that's where I like to play. So today we saw Tesla dip massively. They went all the way back down to, I think it was 565, something like that, a huge dip. And of course, it was very quickly bought up. But anybody watching Bollinger Bands would have noticed, oh, this does not belong here. This is going to revert to the mean, which I'll also talk about in a little bit as well. So now, when I talk about the 5%, everybody who knows me knows I always tell people on Patreon, be patient, be patient, be patient, be like a hunter in the woods, be like one of those deer hunters. They cover themselves in camouflage and deer urine and hide up in a tree for 3 days and don't move because they wait. They wait for things to come to them. And that's exactly what this is about. So once you have that instilled in your brain to think about Bollinger Bands and wait for things to go outside into that 5% zone, either above or below, are critical for buying and selling. And remember, the most important thing in trading is not necessarily buying, but it's getting out and realizing your gains. So just think about that as well, everybody, real quick. So mean reversion. Now this is another very, very important thing that we need to talk about. So back to the danger zone, which I spoke about. Always, every time you go outside the Bollinger Band on the top side, it's going to ultimately revert back to the mean. Same thing when you go under, it'll revert back to the mean. But when it comes to trading, it's important to know what the overall trend is going. And that's why I love Bollinger Bands and I love the mean line, because mean reversion is always going to happen, but it may not be a good thing. So if you're buying at the bottom and you expect it to go back to the mean, make sure the mean isn't falling dramatically, because there could be a case where the trend is very much downwards and you don't want to be in that trade at all. So always zoom out, think big picture, and know where the trend is going and watch that mean line and make sure you don't play in the danger zone, and make sure you identify exactly where the opportunity zone is and play it nice. So the other thing that I'd like to talk about is what I call the squeeze. This is the Bollinger Band squeeze. And this squeeze occurs when volatility falls to low levels and the Bollinger Bands become very narrow. We saw this work with Cardano a few weeks ago. And when the volatility contraction or narrowing of the bands typically foreshadows a big move, either up or down. Now, you've got to really zoom out and get a good feel for exactly what's going on to be able to determine exactly where it's going to go. And once the squeeze plays on, a subsequent band break is the signal of the start of a new move. And we saw that happening with Cardano, where it blew up, I think it was $1.20, and it just shot all the way up from there. So that's what I call the squeeze. So watch for those bands to narrow and then wait for the pop. Make sure you're playing on the right side. Now, the other thing to look at is what I call variable support and resistance. And you guys know I like to draw trend lines. But what's even better than trend lines are these variable support and resistance lines. And this is an example of Twilio. I nearly pulled the trigger on Twilio yesterday and today. It's one of those ones I've been wanting to add to my portfolio. I didn't, and I should have. And I was too busy focusing on a million different things. And yesterday was a very busy trading day as well. That being said, Twilio typically sits in the Bollinger Bands very, very tightly. Just look at this chart going back 4 or 5 months. It doesn't leave, with very few exceptions. I think it's left the Bollinger Bands 3 times in 4 or 5 months. And that is incredible. So once you know it is out, you'll notice it's going to bounce back. You'll also notice as well with Twilio here, the mean line is going downwards. So always keep an eye on that. Like I mentioned before with MicroStrategy, reverting to the mean is a good thing sometimes when you're on the low end, but make sure the trend is your friend and it's going up and not down. That's just one thing I want to emphasize for you all as well. Now let's look at what they call walking the upper band. This is terminology. And I've never seen such a crazy case of this for such a consistent amount of time with Ethereum. So this is a classic case. You can see the upper band of the Bollinger Band here, and Ethereum is just pumping, pushing the whole time. That resistance level, it's pushing so hard. And that means the accumulation is incredible. The strength is incredible. Normally, when you hit the upper band, it's a sign that, yeah, the stock's probably going to revert to the mean. But when you see the crazy strength like this continuing over time, it's remarkable. I'm looking at Ethereum right now. It keeps going up. You know, we are less than 1% off the all-time high. So important to watch that. Now, there is also a corollary to walking the upper band. And guess what that is? You guessed it, walking the lower band. So this is Palantir, another trade that we do, and a great stock. But this is a classic case of all the entry points we can see from the Bollinger Bands indicated by these little blue arrows in the chart. 1, 2, 3, 4, 5 of them. But this is typically a sign of weakness or something being very oversold when it keeps struggling to get above that lower band. Now, I'm very bullish on Palantir long term. I think it's a great name. They want to be the biggest software company, computer company, the Skynet of the world as they go forward is their whole vision. And the stuff that they do is quite remarkable when you dig into the company. But here, this dip today, it wicked all the way down to exact number. Let me pull up the Palantir chart. Today it zipped down to $17, $17.06. Actually a little bit below that, $16.40. I'm looking at 2 conflicting signals. It moved to $17 and it got quickly bought up at that price. Again, it fell below the Bollinger Band and the money just flooded in and bought it up like crazy. So that is the lower band. And you can see how simple this Bollinger Band stuff is. But once you get used to it, you can't live without it. So let's talk about what I call the Enchilada. And this is when you look at a whole bunch of stuff together. So in this particular chart here, I have Tesla. Now, on my chart of Tesla, I always have the Fibonacci retracements. We covered that in a previous video. I have my Bollinger Bands here with a 2-hour chart, 100 period, which is about 25 days in this math. And I also have my RSI of 10 at the bottom. So there's a couple of things I want to point out here. One, you see the first danger zone at the top. Outside the Bollinger Bands, this was not sustainable. Tesla went to $780 and it just didn't have enough strength to stay up there, and it came crashing down gradually over time. And it bounced very nicely off the Bollinger Bands 3 or 4 times. And today and yesterday, it broke through and just fell completely out into what I call the kill zone. But there's a couple of things I want to point out here. Number one, The kill zone is outside the band, which we know it's in the 5% zone. Number 2, the RSI went down to 11, which was the lowest RSI for Tesla in quite a long time, in way over a month. And the third element is you look here at the Fibonacci. It fell down to the Fibonacci 0.786 level and bounced from that. So it's like a trifecta of things all happening at the same time. You got your RSI super low, completely oversold. You got falling out of bed, dropping completely outside the Bollinger Band, and bouncing off a Fibonacci level of the 0.786. So there you have it, the enchilada. How easy is that? So let's go a little bit further and talk about disclaimers again. None of this is investment advice, but just pointing out things that I use and see every single day. And as usual, the conclusions. A couple of things I want to touch on here real quick. One, these Bollinger Bands give me spatial awareness of where the asset is between overbought and oversold. Again, remember, no indicator, no TA, no standalone indicator or technical analysis should ever be used standalone without knowing exactly what's going on in the world and looking at all the other factors. Check out my investment series, Fundamental Analysis. I think it's part 2 or part 3 to get a handle on all of that. In fact, there's a link to that up here in the corner. And Bollinger Bands are also great for affirming support and resistance levels. Really, really, really good at that. And they are amazing for me at enforcing patience to wait for the 5% zones. And I'm going to zoom out for a second here because the secret is not to overtrade. When you overtrade, you lose. When you're patient and you wait, you do far better. It increases your probability of success a lot more. So, and finally, just get comfortable with your own settings. Play with different time charts like 2 hour, 1 hour, 15 minutes, 4 hours, 1 day charts, whatever. Play with your length and play with your RSI. Some people like to play with a 200 length. I like 100 to represent 50 days or 25 days, depending on the actual setting I'm using on the chart. And your RSI. I use 10, but you can use 14, 12, 6, whatever you like. And remember, always keep an eye on the fundamentals. So coming up in future TA Tuesdays videos, this is the full agenda. I've covered everything already with green tick marks, and I'm going to do more. I've had some requests as well for a few other items, but I think next I'll either do candlesticks or stochastics or exponential moving averages, or maybe a combination of things. But if you have any requests for me to look into, somebody wanted me to look at the Issue Me Cloud or whatever. I don't actually use that, but I can look into it if you like. Again, you don't need to use everything. Simple trend line, simple statistics were what I used back in the 90s exclusively. I dialed in my statistics and used trend lines with that. And since then, I've gotten much more into MACD, RSI, Bollinger Bands and stuff. And Fibonacci retracements, they're some of my real favorites. So hope you like this content. Hit the like if you do, and subscribe. And a big thank you to everybody on Patreon. Again, I like to consider myself the Swiss Army of the tool in your back pocket when you go to the market. So big thank you to everybody there, and see you all soon. Bye.